the session. Another element of practical information is that you can find the recordings of this EAA workshop, but also of prior workshops on the blog, on the website of the EAA under the Accounting Resources Center. You'll have to wait a few days before the recordings are made available, but you can find the recording there. Another element of practical information is that we would like to invite you to mute your mic during the presentations. This doesn't mean that we want this presentation or this session, this workshop to be an only listening workshop. We really want it to be very, very interactive. So if you have questions, if you have suggestions, please add them in the chat. If you want these questions or suggestions for the chat only, and if you don't want to speak up, you add before you enter your question or suggestion for the chat only. If not, it might be able that we ask you to unmute your microphone and ask your questions to one of the three presenters here. So I think this is really all the practical information I had to communicate to you. So like I said, these workshops are meant to bring the academic world and standard setters together and to exchange information. So don't keep quiet, use the chat as much as possible, I would say. Why do we have the seminar on crypto assets? Well, probably all of you got to know crypto assets when Bitcoin was developed many years ago. And at the moment, it's more likely than not that Bitcoins and crypto assets and liabilities are there to stay with us. I would say forever, but at least for the coming periods. On this area, there was not a lot of accounting standard setting done yet. And so therefore, we thought this was really a topical area. And also EFRAG has really started to develop a discussion paper on accounting for crypto assets last year. And they would also like to provide or to get input from the academic world on their discussion paper. I will introduce, so we will also have the view of the International Accounting Standards Board, and we also have an academic reflection, but I will introduce each speaker from that part of the world when they start with their presentation. So now I would like to ask to take the floor to Vincent Papa. Vincent Papa is working at the moment at EFRAG, but he has really seen financial reporting, I would say, from all corners or all perspectives, because he's been working as an auditor with KPMG, as a management consulting with Accenture. He has been defending the investor perspectives for a long time, being Director Financial Reporting Regulation at the CFA Institute. And in 2018, Vincent Papa joined EFRAG. At the moment, he is responsible for many projects, but one of his projects is accounting for crypto assets and crypto liabilities. Before I give him the floor, I would like to say that we have structured the whole 2 hours in blocks. First of all, we will introduce you to the area of crypto assets. Then we will focus on the accounting for crypto assets from the point of the holder of crypto assets and liabilities. Then we will turn our attention to the issuer of crypto assets and liabilities. And then we will look at valuation. Each time in between these blocks, we have polling questions, which we would like to ask you to participate in, and we will give time to the audience to pose questions and suggestions. So I think it's time for me now to shut up and to provide the floor to Vincent Papa, who will introduce you to the exciting world of crypto assets and crypto liabilities.
Thank you, Anne, and hello, everybody. And again, thank you for the opportunity to engage with the audience on this topic, which continues to draw stakeholder interest. I'll just mention that the discussion paper that Anne has mentioned is part of IFRAG's proactive research work, and it was approved by the IFRAG board in 2018. And the research itself was conducted in 2019 and in the first half of 2020. And the primary objective of IFRAG research is to support the work of the ISP, including in its current or prospective agenda. So if we could move to slide 4, in terms of setting the scene, I'll just touch on what are crypto assets. So in the discussion paper, we highlight that there's no commonly accepted definition. And we provide at least 5 different definitions from different organizations. Nonetheless, it's just worth touching on 3 distinguishing features when you describe private crypto assets. So the first feature is around the cryptography, which is applied in the overall process of updating transactions on the blockchain. So cryptography has a role in generating unique digital signatures for each transaction, also verifying the authenticity of transactions, and ensuring that via the consensus mechanisms, there is no double spend problem. So whenever you've got digital data or information, there's always the challenge of it being replicable, and there's the risk of there being a double spend problem. So cryptography is used to avoid that particular problem. The second key feature is around the distributed ledger technology. And blockchain, which is well known or commonly referred, is just one type of distributed ledger technology in which details of transactions are chronologically recorded on a shared ledger in the form of blocks of information. And it effectively forms an immutable or difficult to change chain. So just as an example, I would give the example of the Bitcoin blockchain, which has been running since 2009 when it was founded. I was looking at the state of play yesterday, and we are talking about over 680,000 blocks have been formed since 2009, and that's updated every 10 minutes. So we talk about blocks in the context of digital asset rights, but a block could represent transactions or data of many types. So in that sense, there's a broader use case for blockchain technology. The third feature is decentralization, where every fully participating node or computer that's part of the network is in the ecosystem, has a copy of the ledger. And this notion of decentralization is rooted very much in the libertarian philosophy of eliminating powerful intermediaries and having censorship-resistant rights. The idea of decentralization is not new. Actually, classical economists in the 70s had also noted the flaws of the traditional monetary policies and had suggested that there may be need for private currencies being issued. So the Nobel Prize economist F.A. Hayek is just one example of those who put forward this idea way back. Prior to cryptos, there have been other attempts to create private currencies. One example was DigiCash, and another was eGold, which was in existence from 1996 to 2008. The launch of Bitcoin, which Anne referred to, which is the first cryptocurrency in 2009, was in the aftermath of the financial crisis. And this really aimed to crystallize the idea of having decentralized cryptos. However, we note that there's a continuum of decentralization, and there's some centralized networks-based cryptos. So for example, Ripple is just one example of a crypto asset which is not based on a decentralized network. So if you could move to the next slide, please. Here, I would note that at this point in time, there are more than 6,000 different types of crypto assets. And in this slide, we give a taxonomy of the broad classification that's in place that were within the scope of the IFRAG discussion paper. So we have got payment tokens, which are a means of exchange, utility tokens, which are rights to consume, access or network goods and services, security asset tokens, which are akin to investments, and hybrid tokens, as well as stable coins, which aim to address the question of the price volatility of crypto assets. It's just worth noting that some standard setters, such as the France or French ANC, do not apply this type of taxonomy when they are developing their requirements. They take the view that this is a rapidly evolving landscape and any taxonomy is bound to be static. Nonetheless, in the discussion paper, we see that it's still useful, particularly if you consider it in the context also as a complementary measure to considering the underlying characteristics of crypto assets. If you move to this next slide, please. Here we just give a timeline of a selection of watershed moments in the whole crypto asset space. It's just worth mentioning that when IFRAG issued the discussion paper last year in July, the market capitalization of crypto assets was at $300 billion. And today it's at near $2 trillion. And it just shows how rapidly the landscape is evolving. Another data point we have here points to the case where nearly 10 years ago, 2 pieces were bought for 10,000 units of Bitcoin, which is the equivalent of $500 million to buy 2 pieces. So it just shows you how much has changed, and it's clearly a dynamic landscape. If you move to the next slide, please. So here we do summarize the key motivations for the IFRAG research. And as I noted earlier on, one of our primary motivations is to inform the ISB work. And currently the ISB has an ongoing agenda consultation on its future projects. So we hope to inform the ISB's thinking around whether or not to address cryptocurrencies and crypto assets. I'd also note that there are other standard setters, so local GAAP, who are considering the need to develop accounting requirements, a case in point being the US FASB. So the FASB has gotten requests at least 3 times to address cryptocurrencies, but they've deemed it not to be necessary on the basis that these assets were deemed not to be pervasive. But there may be a change in viewpoints, and it may be a topic that will be considered in their forthcoming agenda consultation as well. The other key point I would mention is that the scope of the discussion paper is broader than that of the 2019 IFRS Interpretations Committee agenda decision, which mainly focused on cryptocurrencies where there's no claim on the issuer. So our discussion paper comprehensively analyzes the accounting of holders, issuers, and valuation considerations. And really, the principal idea is to aim to future-proof IFRS requirements for an emerging set of transactions. So, Anne, before we get to the holders, I'm not sure whether we intended to have polling questions at this stage.
Yeah, at the moment, we would like to launch our first polling questions. So I promised you we would like to have an interactive session. And if Baha could launch the first polling question, which comes up here. And it is, what do you expect will be the level of holding or issuance of the current generation of private issuer crypto assets by large institutions in the next 3 to 5 years? So we will wait until most of you have voted. Right, I see that most of you have voted. And Baha, if you want, you can share the results. So you see the results. So most of you think that the level of holdings or issuance will be moderate. So that's the perception. I don't know, Vincent, if you want to comment on that, or if you want to move on to the topic of accounting for crypto assets and liabilities by the holder.
Say we have a chapter in the discussion paper where we try to look at potential market developments, but we take the view that we should avoid crystal ball gazing. So we do not have a view of what's going to happen, and we are watching as much as others. So moving on to holders, which is one of the key chapters. So if you just go to the next slide, please. So here, maybe before I get to this specific slide, I'll point out that a question that's often posed is whether crypto assets are actually assets. So that's a question that we are often asked, are they assets in the first instance? And we take a view that they are based on the conceptual framework definition, whereby an asset is where a resource is controlled by the entity as a result of past events and from which future economic benefits are expected. Furthermore, an authoritative legal opinion, which was issued in the UK in 2019, highlighted features that warrant crypto assets being considered as property from a legal perspective, particularly the attributes of definability, exclusivity, whereby unlike other forms of electronic information, each crypto asset transaction yields unique data parameters that are exclusive to the holder, and this results in digital scarcity, and the fact that they can be assigned or transferred between counterparties. So as far as holder counting is concerned, in the discussion paper, we reviewed the 2019 IFRS Interpretation Committee agenda decision, which clarified that cryptocurrencies are to be classified as either inventory or intangibles, depending on business purpose. We also reviewed the guidance from 7 standard setters and the guidance that's been provided by the accounting firms, some professional associations such as the AICPA and CPA Canada, and emerging academic literature. So even within your community, there's an emergence of work that was very helpful for our research. So the discussion paper points to several areas in accounting by holders where IFRS amendments could potentially be considered. So there is a concern that the measurement requirements under the related requirements for IAS 38 for intangible assets and IAS 2 for inventories do not always lead to relevant accounting for crypto assets. Specifically, there's a problem when entities can recognize price declines of highly volatile assets, but where they face restrictions as far as recognizing price appreciation. There's a concern that the IAS 38 revaluation approach imposes restrictions towards fair value measurement in the absence of active markets. There have also been questions which have been posed around the appropriate impairment approach if a crypto asset or the cryptocurrencies are deemed to be intangible assets of indefinite lives. So there's really a question of how do you appropriately impair those type of crypto assets. And furthermore, there's a concern that impairments across entities may not be comparable depending on the approach that's taken. So what we've heard, because in our research, apart from reviewing the literature, we also had an outreach to stakeholders. What we heard from stakeholders was that due to the characteristics of crypto assets, fair value through P&L would likely be the right measurement approach. There's also a view that IAS 38, which was issued in 1998, was not written with the type of intangible assets that one considers crypto assets to be in mind. So there has been a suggestion to scope crypto assets out of IAS 38 and to allow preparers an accounting policy choice, whereby they can choose the right and appropriate recognition and measurement approach. I would also point out that in February, an article that was written by a former ISB board member, Steve Cooper, who was also quite an experienced user, and he was writing this article from the point of view of investors. And he also was pointing to the challenge around these assets not being measured under fair value. And he suggested that one could consider including these assets within the scope of IFRS 9. Now, these challenges that I point out too in relation to IAS 38 and IAS 2 and related to crypto assets in particular, but they also point to a broader question really around the need for guidance for non-financial assets when these are held as investments. So in the past, we had IAS 25, which was accounting for investments, but this was superseded by other standards. And there's a perception that stakeholders have had that there's a gap as far as the guidance for non-financial asset investments is concerned. Moving to the next slide, we do highlight 2 other holder-related challenges. First is around the eligibility for financial asset classification. So IAS 32 definition of a financial instrument is any contract which gives rise to a financial asset of one entity and a financial liability or equity of another entity. in effect, there needs to be a contract or contractual relationship between parties. Now, some security and asset tokens could qualify as financial assets. So for example, coins that are redeemable for precious metals, or tokens backed by real estate, and also those tokens that have ownership rights or entitlement to share of profits or revenue. But there are other security tokens that may not qualify as financial assets based on the IS-32 definition, even when they have functional equivalence to traditional equity and debt securities. And here really the challenge is around the legal enforceability of smart contracts, of which crypto assets or several breeds of crypto assets are based. And there can be questions as to whether they can be compelled to perform in a court. And also the nature of these contracts may restrict the ability to capture legal nuances that are present in typical contracts. So they may only be suitable for highly standardized contracts, but not the typical complex contracts that are there in financial markets. Another key issue which we highlight in this slide is whether, due to the emergence of fiat currency-backed stable coins, and also the emergence of central bank digital currencies, the definition of cash and cash equivalent under IFRS, whether that needs to be updated. So this is a question we do pose as to whether this needs to be considered. This particular type of crypto assets need to be considered as cash or cash equivalent. So we are not talking about Bitcoin in this case, but more stable coins and CBDCs. The next, I suggest I'll not touch much on this slide, but this slide just highlights, the next slide, please. We highlight various areas where clarification may be needed. Moving to the next slide, which will be the final slide I'll speak on. So here we are addressing accounting related to intermediary holders. So as was proven by the case where a software engineer lost 7,500 Bitcoins because he threw away his hard drive, and that would be worth $400 million today, the need for custodial services is likely to increase. So the accounting by intermediary holders is an important question. And here the key question is which party between the depositor client versus the intermediary has economic control and thereby needs to recognize the holdings from the statement of financial position. At this point, there's no explicit IFRS guidance for intermediary holders. And there's need to consider also specific contractual arrangements and applicable jurisdictional laws and regulation. Be that as it may, there is a variation in jurisdictional laws and regulation. So for example, in some but not all jurisdictions, cryptos that are held separately rather than commingled in a wallet are deemed to be, that is deemed to be evidence that the depositor client has control. So there have been a set of suggested indicators of control within the accounting firm's publications, but there remains a need, an overarching need for clarifying IFRS guidance. So that's one point we put across in the discussion paper. So I'll stop there for the holders' issues.
All right, thank you, Vincent. Then it's now time to give the floor to the view of the International Accounting Standards Board, and that view will be presented by Craig Smith. Before joining the IFRS Foundation in 2016, Craig has been working in the financial services audit industry. At the IFRS Foundation, he usually works with the interpretations committee, so of the board. And then he has spent a lot of time on application questions in relation to IFRS 15. And currently he is the team leader of the project on goodwill and impairments, but he's also the staff member responsible for crypto assets for the EISB board. So Greg is the right person on the right spot to inform us about the view of the EISB on these issues and maybe some ideas on the way forward the EISB might take. So Greg, I give you the floor and then we go also to the next slides.
Thank you, Anne, and hello to everyone. So what I wanted to start with in my section of this presentation is basically a brief look at the history of the board's discussions on holdings of crypto assets. And so this topic first came to the board's attention when the Australian Accounting Standards Board brought a paper on cryptocurrencies, specifically to the December 2016 ASAF meeting. And at that meeting, our board's chair, so Hans, agreed that the staff of the ISB would monitor developments in this area. And that's where I first became involved in this area. So through our monitoring, the scope of this kind of expanded into crypto assets more widely, and also kind of ICOs and issuing crypto assets through 2017, 2018, 2019, and so on. So the board has so far decided not to undertake any standard setting to change IFRS standards for any aspects of the accounting for crypto assets. In particular, it made that decision at its meetings in November 2018 and November 2019. I'm going to come back to those in a minute or two to reflect on maybe some of the reasons why the board members decided not to do anything at the current time. But I wanted to highlight two things on the slide before moving on. So first of all, on the right, Vincent's already mentioned that last month the board published a request for information on its third agenda consultation. And the agenda consultation is a process that happens every 5 years, where the board goes out to ask stakeholders what the priority topics it should be working on for the coming 5 years are. And the request for information that the board published last month, it contains a list of some possible projects that the board might work on, with a bit of description and how long those projects might take. And one of those projects is a project on crypto assets. So that's something the board is seeking input on. The other thing to highlight on this slide is the IFRS Interpretations Committee agenda decision that Vincent has already mentioned as well. So that was published in June 2019. And the agenda decision focuses specifically on holdings of cryptocurrencies. And it therefore kind of sets out an official IFRS position on how IFRS standards apply in those particular circumstances. Although that agenda decision is focused on cryptocurrencies specifically as a subset of crypto assets, the way it's written kind of steps through some of the considerations that an entity might make even for other types of crypto assets. Although the conclusion might be different depending on the rights and that holding a different type of crypto asset gives you. The way that the committee thought through this topic, I think, might be interesting for something for preparers to consider when they're thinking about how to hold or how to account for holdings of other types of crypto assets. So if we can move on to the next slide, it describes basically the contents of the committee's agenda decision. And so most people that I've spoken to tend to default to talking about holdings of cryptocurrencies as an intangible asset, because it seems like the most intuitive kind of place to start for this. And the committee did confirm that the cryptocurrencies meet the definition of an intangible asset in IAS 38. But IAS 38 is a residual standard, and therefore an entity actually has to consider whether an intangible asset is within the scope of anything else before it comes back to concluding that IAS 38 applies. And so the committee steps through some of the other standards that cryptocurrencies might belong to. So it looked at first at whether it's cash, and I think as Vincent's mentioned, IAS 32 contains a description of why cash is a financial asset. And it notes that cash represents the medium of exchange and therefore the basis on which all transactions are measured and recognized in financial statements. And so this picks up kind of two of the three characteristics of cash that economists often cite, so the medium of exchange and the unit of account, and the third being store of value, which isn't necessarily mentioned by IFRS standards. And the committee noted that at least when it considered this issue in June 2019, it wasn't aware of any cryptocurrencies that would meet this kind of definition to be considered as cash. And the committee went on to consider whether cryptocurrencies might be another type of financial asset, but but concluded that because the way it's defined cryptocurrencies in the agenda decision is that they don't provide a contractual right to cash, it's therefore not another type of financial asset. The committee did conclude that an entity applies IS2 to account for holdings of cryptocurrencies if the company is holding its cryptocurrencies for sale in the ordinary course of business. And that, of course, means that a company would typically measure its cryptocurrencies at the lower of cost or net present value. But IS2 does contain specific requirements for broker traders. And so if the entity is considered a broker trader, that cryptocurrency would be measured at fair value. And so having considered all these other standards, if the entity concludes that none of them apply to its holdings of cryptocurrencies, then it applies IS38. And I wanted to pick up on something that Vincent said on holdings as investment purposes. So paragraph BC5 of IS38 does explicitly say that the purpose for which an entity holds an item within the scope of IS38 is not relevant to its classification as an intangible asset. And therefore, I would say that there's not necessarily a gap in IFRS standards in the sense that there's no missing requirements for things that are held for investment purposes. But I know that some people do want to change the outcome, and I've identified that as a particular population of intangible assets they would like to have a different standard and a different outcome for. So how does IS38 apply? I think in practice, the entity would conclude that cryptocurrencies have an indefinite useful life, and therefore would measure its holdings of cryptocurrencies at cost less impairment. But as Vincent mentioned, IS38 does have a revaluation model that an entity can choose to apply to intangible assets as long as those intangible assets have an active market. And if the entity chooses to apply the revaluation model in IS38, then it measures its holdings of cryptocurrencies at fair value on the balance sheet, and with changes in the fair value being recognized in other comprehensive income. And the last thing I just wanted to mention here was also in response to another comment that Vincent made was on holdings of cryptocurrencies on behalf of others. So this is not a question that has been directly asked of the board or the committee so far, but we are aware of it being a consideration in practice. And I just wanted to kind of say that IFRS standards explain how to account for particular rights and obligations, and an entity needs to know what its rights and obligations are before it can work out what IFRS standard applies. And I think a lot of the questions in holdings on behalf of others really comes down to what an entity's rights are. So who is it that actually has the right to this cryptocurrency? And that legal and that regulatory question really does need to be solved before you can solve the accounting question that comes after it. Any kind of standard setting or an agenda decision from the interpretations committee, for example, it can't tell an entity what its rights and obligations are. So if we can then maybe move to the next slide, please. So moving on from the agenda decision, as I mentioned, the board has discussed whether to undertake standard setting to change some aspects of IFRS standard for the accounting for crypto assets. And so far, the board has decided not to change IFRS standards. And board members put weight on different reasons for that, and so obviously I can't speak for all of them as a staff member, but from being at the meetings, I think there's probably two reasons that were fairly common amongst board members. So the first was a concern about the reliability of fair values of cryptocurrencies beyond those already measured at fair value, so beyond those for which there's an active market. And we'll come back to valuation in the third part of this presentation. But perhaps the main reason was that the evidence that we obtained as staff was that holdings of crypto assets were not really prevalent. So I did keyword searches in 2018 and 2019 of financial statements of IFRS reporters to try and see how common holdings of crypto assets really were. And this slide presents the results of those keyword searches. So I searched for things like cryptocurrency, crypto assets, Bitcoin, Ether, blockchain, things like that. And when I did that search in 2019, identified 66 IFRS reporters that reported holdings of crypto assets. And that was up from a total of 26 the year before. But actually, when you look at many of these companies, these are relatively small and they tend to be focused on crypto asset activities. So for example, quite a large proportion of them were miners of cryptocurrencies. And therefore, there was little evidence at the time that holdings of crypto assets were widespread and material for kind of mainstream companies. And so I think that relatively low prevalence of crypto assets contributed to some board members concluding that changing the accounting for crypto assets wasn't a higher priority than the things that the board was already working on. But as I noted previously, the board has published a request for information as part of its agenda consultation last month, and obviously the board will consider feedback on that and might decide to change its mind. But with that, I'd like to pass it on to Benedict, if that's okay.
Yeah, that's fine. Thank you, Craig, for explaining very clearly what the position of the board is and what influenced them to take this position for the moment, of course. Then I would like to switch the floor to Benedict Franke. Benedict, yeah, there you are again. So Benedict, usually in these financial reporting seminars, we always invite an academic to share his view or her view on the state of standard setting and the standard setting issues of the topic we discuss. And I think that Benedict Franke is the right person to do that because he's doing research on blockchain. He's currently conducting an analytical study in which they look at the information implications for institutions from blockchain. But before I give him the floor, I would also like to say that he has his PhD from University of Mannheim, was assistant professor at Mannheim for a while, and now he moved to Schema Business School in Paris. Besides research on blockchain, Benedict has also papers on transparency and disclosures, is doing empirical research as well as theoretical and analytical research. But now I would like to give the floor to Benedict to, well, give the academic perspective on what has been said so far. So Benedict, you can take the floor.
Thanks, Anne. So, if you can go to the next slide, we can just continue. So I try to think about how to do the academic commentary on such a topic that is so early, right? And we don't have that much data. We don't have that much work. I mean, you just heard I'm doing analytical research on this topic, and that's for a reason. But I still try to start, give you some data in each of the blocks, let's say I'm going to give you a part here in the presentation. So the first one is kind of related to what Greg showed us just for the IFRS reporters. So I saw these numbers in the discussion papers and I was curious myself. So what I had was the same case from the US. So I basically went to Edgar and did kind of the same thing. But what I did, and I think what's important, is that there is a fundamental difference between the cryptocurrencies that most of us think about when they think about crypto assets and the other tokens that are out there and are going to be increasingly out there. And the picture does not change that much. So that's number one, but you see it here. So I have kind of some light red bars and some dark red bars. And the difference is that I look for keywords that are more crypto assets, cryptocurrency related in the light red bars, and the black ones are really blockchain related. It's an easy keyword search, so no kind of broad range of keywords here. But what you can see is that we're kind of hovering right now at around 2% of the filings mentioning one of them, and the blockchain picking up. It's still quite low, so that's kind of confirming Greg's picture here. But you see that different types in the, let's say, crypto assets world behave differently and are going to have a different speed. And that might inform kind of what we need to focus on. But if you look at the picture, you get a very similar impression. It is not that prevalent yet. I mean, we have all the stories from Elon Musk and so on. So we see some pick up, but I mean, that's the picture right now, and I kind of confirm that. But we also saw in the first polling question that most of you think that there's going to be a moderate or significant increase in these assets. And I think it was like 79% that actually thought that. And I think that is true. So if you go to the next slide, Baha. So what I tried to grasp is a little bit the idea of what's the trajectory here. And what can we expect? And I mean, one thing I can kind of as a personal anecdote, but I guess many of you can share, if you talk to students or look at theses that are written, the number of people interested in this topic pick up a lot. I'm not saying that all the ideas that the students have and want to do as a startup idea are going to work out or are special to blockchain. That feeds back to our lack of definition and our, let's say, taxonomy that we don't share yet, really. But the other way I try to tackle is look at the patent numbers. So here you see US, based international and EU patents. And I mean, there were some in 2008, but you already see the scale change quite a bit. So right now, in 2020, it's kind of finished by 2021, is on the same trajectory to repeat that. And we all know that now the COVID pictures, right? So you see the exponential growth. It's kind of there already. So it's close to doubling each year. So in terms of, is this going to matter? Probably yes, right? I mean, these patents are going to find their way into applications. The big issue that the industry faces is regulatory. They don't know which ones to pursue. It's the same thing we are facing here right now, discussing today. But I think it's fair to say that at least we're going to see a moderate increase in these things in the next 3 to 5 years. I think the problem is estimating the time period. That's going to be a thing. But that these things are going to go away, or we're not going to see the crypto assets around. Yeah, I mean, if you look at the picture, you see the picture. I mean, it's not clear in which form. That's all our big issue. We're kind of shooting on a moving target here. Okay, so that's a part of the data here, because I have just 5 minutes. But can you go to the next slide? And I talk a little bit about the researchers out there. And I'm basically going to say there is not much out there, especially if it's about financial reporting for crypto assets. There is conceptual work. There are some case studies there. So what I picked here, I'm showing here is just a recent literature review. I mean, there are some of them out there, but as everything is developing so quickly, I just picked that one. And you basically see that in the end of 2020, or I think in the mid of 2020, they collected the data. There was not much in the top 5 accounting journals. That's now going to change. I guess we had the JAR conference on the topic. So there's management science now picking up. So there are more interested in the topic. But most of the work we have is, again, conceptual case study based. They had 3 theoretical and 5 archival studies, but most of them focus on Bitcoin. So cryptocurrencies, and the same for financial reporting. So let's say the learning from this for the rest of us here, that's around for the academic community, is that there's not that much out there. It's a wide open field, but there's a large interest, I guess. Yeah, and there is a lot of conceptual work out there. So you have now work where you can start kind of doing more research. Most of the stuff that is out there, just to finish that point, is there is research on the accounting function and kind of general audit considerations, kind of how can blockchain change, kind of revolutionize accounting. But we already see also some anecdotal evidence. That's on the last point here on the slide that I wanted to highlight. That's for Canada. And we saw Canada was the one where there were some people having actually blockchain issues or topics. That's where we see already now some auditors being reluctant to take on clients that have a high exposure. So we see, I mean, again, that's anecdotal. These are interviews that they've done, but it has implications. And I think the lack of guidance, also as Vincent said, is going to be a problem. Maybe not now, maybe not next year, but it's going to increase probably. But I also don't try to make kind of wide forecasts here, but that's at least what I can tell you right now. So that's it from my side.
Yeah. Okay, thank you, Benedict. We now have introduced 2 polling questions to get, in fact, an idea how this topic lives among the academic world. And I would like to ask Baha to introduce the second polling question, if possible. And with this question, we would like to know, are many of you doing research in the area of crypto assets, crypto liabilities? Are you teaching crypto assets and liabilities, the financial reporting it to your students? Or are you doing both or none of the above? Yeah, so although the polling is still going on, we see already some tendencies, and I think, Baha, you can share the results. And if I look at the results, they are in fact what we expected a little bit, that crypto assets and crypto liabilities is also quite new for the academic world. More people are doing research in the area of crypto assets and crypto liabilities, probably because the field is wide open, like Benedict said. And if we look at teaching, well, there's not a lot of teaching on financial reporting about crypto assets and crypto liabilities. There are no standards developed yet, so probably that's also the reason. So in fact, yeah, this poll results confirm a little bit what we in fact assumed. Baha, we have a second poll. Could you perhaps launch question 3 for the polling? Right, thanks, Baha. So a number of you are doing research in the area of crypto assets, crypto liabilities, and we wanted to know a little bit, the uptake of research is not a lot. Why you think not a lot of research has yet started in that area? And so we list a number of reasons that we think could be the underlying cause of the limited research available, that the topic is fairly new. It requires a highly specialized, specific technical knowledge. There's only limited data available at the moment. High-ranked journals think the topic is too technical. And some people would like to wait to see how things evolve. What I also want to say, so if after this seminar you still have ideas or input of research that you would like to share with EFRAG, with Vincent, I will put Vincent's email in the chat soon so that you can also bring all material to him. So I think you can share the results at the moment. Baha, yeah, thank you. So indeed, yeah, there's only limited data available at the moment to do really large scale empirical research. So that's regarded as a main research. And also the fact that it's really a highly specific technical topic. I'm also looking at the chat at the moment, and I don't see any questions. I think probably questions will come up later. Therefore, I would like, and also I'm looking at the time schedule, so we're close to 1 o'clock at the moment. So I would like to ask Vincent again to take the floor. And now we're going to the issuers of crypto, of these instruments. So Vincent will now take the floor again and introduce you into the issues that are, with respect to when people issue these instruments. So Vincent, the floor is yours again.
Thanks. So just some general observations. What I'd note is that there's less guidance for issuers than there is for holders. Furthermore, I think as Craig may have noted, issue accounting was not part of the IFRS Interpretation Committee agenda decision. So the board may have considered issue accounting, but the agenda decision scope was cryptocurrencies with no claim on the issuer. We also take account that there can be symmetrical considerations when thinking about the accounting by issuers and holders. So for example, on the question of eligibility for financial instruments accounting, the analysis in the discussion paper is heavily focused on the relatively highly unregulated initial coin offerings, or ICOs. For ICOs, there are significant accounting challenges given their embryonic and non-robust documentation levels. So there's such a variety of what are described as white papers, which are meant to be equivalent to the prospectuses that you'd have for the typical securities. But the oversight and the robustness of information within the white papers is certainly of a much lower quality than would be the case for the typical prospectuses that are under the purview of security regulators. Having said that, within the scope of the discussion papers, when we talk about issue accounting, we are also considering the more regulatory compliant security exchange offerings and initial exchange offerings. And these have really come to the fore in the last few years, albeit that the volumes are still on a growing level, so they're yet to be fairly widespread. But I would note that some of the large well-known entities, and some of them would be IFRS reporters, have had SEOs and IEOs. So in our discussion paper, we talk a lot about ICOs, but what we raise is applicable in a broader sense when you're thinking about issue accounting. For ICOs, I would note that there was a peak around 2017, but at the time we were doing the research, there was a cooling off with the ICO issuance and more of an increased uptake of SEOs and IEOs. I think there was really a concern. I mentioned the white papers tend to sometimes not be robust enough as far as the quality of information is concerned. But there were also lots of scams that came along with the ICOs. So they got quite a bad press, and that can in part explain why there may have been a tapering off in the volumes of issuances. The analysis of issue accounting was also based on a review of a relatively limited number of national standard setter guidance. So I've mentioned overall there isn't much guidance, but that's the case also at the national standard setter level. So we only had guidance from 2 jurisdictions, France and Lithuania in particular. And we are aware that Japan was in the process of developing ICO-related guidance. We considered the accounting firm's guidance and the feedback that we got from the stakeholder outreach. So just moving to the next slide. Here, I'll just say a couple of things. First, the issue of obligations and liabilities arises mainly when they're counterparties and the holder has a claim against the issuer. As we did for crypto assets, we checked whether they meet the conceptual framework definition of assets. The same applied for crypto liabilities. They meet the conceptual framework definition of a liability. I would note that different types of obligations can arise from the issuance of cryptos where the holder has a claim on the issuer. So you can have constructive obligations, performance obligations, and financial liabilities. Moving to the next slide, please. So in this slide and in the following slide, we do point to the applicable IFRS standards, which would depend on the type of obligation that has been created on issuance. So the standards we highlight are IFRS 9, IS 32, in cases where you've got a financial liability. In cases where there's a performance obligation, and this would typically arise with utility tokens, we deem IFRS 15 to be the applicable guidance. And IS 38 could also be another source of IFRS guidance in cases where you do have constructive obligations. We do note the potential need for preparers to apply IS 8, which relates to formulating your own accounting policy choice in cases where there is no clarity on the specific IFRS standard which applies. I would also note at the presentation that IFRAG made, we made to the ASAF last year, both the ISB and FASB board members emphasized that their respective guidance for issuers is robust and applicable, even though it may not be explicitly stated. So from the ISB standpoint, the guidance that's in place is sufficient, but still you have stakeholders in a number of cases raising specific questions as to even when a standard is applicable. So for example, IFRS 15, there may be specific issues that may be hard to resolve. Next slide, please. I noted that we reviewed the national standard setter guidance, in particular the guidance from France, Lithuania. And in our detailed analysis, we also point to the challenges and areas of clarification within IFRS specific guidance. So for instance, on the applicability of IFRS 15, when the issuer has counterparties and there's a question of the principal versus the agent, and will be the question of which entity actually bears the performance obligation. The next slide. So this slide lists some of the other application issues, some of which are addressed in the guidance by France and Lithuania, where there may be need for clarification. So I won't read these because it really lays out and you can read for yourselves. But these are the areas which would be worth considering when clarification is being sought. So just to sum up, I would say in terms of what can be done from an IFRS standpoint, we mainly pointed to areas for considering amendments as far as holders are concerned. For issuers, we mainly pointed out to areas for clarification. So that's a key distinction that I would make. And I also note that a lot of the discussions and the evaluation that's out there tends to heavily be weighted towards holders relative to issues around the issuers of crypto assets. And this particular viewpoint was borne out by, I would say, the reaction of, at least my interpretation of the reaction of both the ISB and FASB, whereby they deemed their guidance for issuers to be robust. So I'll stop there.
All right, so then we'll go to Craig Smith again to have the view of the EISB on this issuer accounting.
Yeah, thank you. So if we can go to the next slide. I guess I don't have too much to add above what Vincent's already said. So how an entity accounts for crypto assets that it's issued really hasn't been subject to as much discussion by the board as the holding of crypto assets. But the board did discuss the topic at the same time as holding of crypto assets. So in its meetings in November 2018 and November 2019, for example. And therefore, this slide looks very similar to the slide that we presented on holdings of cryptocurrencies. The key difference is that the IFRS Interpretations Committee has not published an agenda decision on this topic, and therefore there is no official position of the IFRS Foundation in this respect. But nevertheless, the committee did discuss the accounting for issuing our initial coin offerings in September 2018. And so there's a staff paper that underpins that discussion. And the staff paper is available on our website, but I just want to reiterate that staff papers are not authoritative guidance on how an entity applies IFRS standards. And I think in part the reason for the board not discussing issuing as much as holding is really the prevalence of entities issuing crypto assets is much lower than holding of crypto assets. So at the same time we did the keyword search for holdings, we did a similar one. So back in 2018 and 2019. So in 2018, we found one IFRS reporter that reported issuing crypto assets. And when we did the search again in 2019, there was 4. Sorry, I can see apparently my internet connection isn't stable, but you can wave at me, Anne, if you can't hear me very well. So yeah, I think that's the main reason. So maybe we can go into the next slide. The next slide summarizes the staff paper from the 2018 Interpretations Committee meeting. It kind of talks a little bit about what Vincent has already said. So when an entity has to work out how to account for crypto assets that it is issued, the key question really is what obligations does it have as a result of that? And there's obviously a legal and regulatory question. As Vincent said, sometimes it might be very difficult to work out what the obligation is because very often the white papers are not as detailed. Once you work out what the obligations are, then you do consider whether that obligation is within the scope of a particular standard. So I think I've highlighted similar ones to Vincent on this slide. And just to emphasize that if an entity concludes that its obligation is within the scope of any of those standards, it's not applying IS8, it is directly applying those requirements in those standards. And so basically because IFRS sets out the accounting for particular obligations rather than a particular form of recording that obligation. And there are disclosure requirements. I think the staff paper, we highlighted those. So standards like if you're in the scope of IFRS 15 and IAS 37 does have clear disclosure requirements. If you've got a financial instrument, then obviously there's disclosure requirements in IFRS 7. And there might be some hopefully rare situations when an obligation doesn't fall within the scope of a particular IFRS standard. And in that case, the entity does look to IS8. Just to emphasize that IS8 is not a complete free-for-all. You can't just make up an accounting policy. There is a strict hierarchy that an entity has to consider. So it has to first look at whether there's requirements in IFRS standards that deal with similar and related issues. And if there aren't any, then it goes on to consider the conceptual framework. But that's all I really wanted to talk about in terms of issues of crypto assets.
All right, so then I think we can go to Benedict to have the academic view. I've also seen that some questions on the chat have been coming in, so I will give the people in the chat the floor after Benedict has provided his academic take to this part.
Okay, so I will speed up to make room for the questions because that's the most important part here today. So what I tried to do here again is like before, give you first some data to let's say give an overview of the landscape, of the ICO landscape that we're having here. So I went to ICO Bench and they're covering, see it down in the slide, around 6,000 ICOs in the last years. And what I found interesting is kind of the breakdown in the industry types. I mean, they don't really have a very clear definition of what that means, but I mean, you get the picture. If you look at the largest one is called platform. Then you have currencies, business services, and so on. So the first thing you will immediately see is there are quite a lot, and I only show the top 9. So there are much more. So these things are completely versatile. Yeah, and that's number one. Number two, what is behind platform? Behind platform, when you take a look, these are usually kind of combination of coins and tokens. I mean, we're kind of keeping them separate here in the talk, or try to do that. But when you look at these ICOs, they throw a lot of things together. So you kind of have, usually we'll have, for instance, a utility token being issued and a currency on the side. So you will have the currency to pay someone else to do the verification, the classical mining stuff with this currency, but that kind of is there to validate your utility token on exactly the same platform. So what I'm trying to raise here is one problem is that if you're looking for obligations, they might be mingled and thrown together. So one thing that you're seeing, at least with my connotation from reading outside the issue here, is that we have a lot of obligations, a lot of things in these ICOs. And at the same time, we have a lot of potential applicable standards. And that's, I guess, what raises the issue, right? That the people have two uncertainties here. And that's why, again, there is this call for guidance, but it is highly complex. So that's number one. Number two, what I'll try to show here is the amount for the market. They're not small, you see it on the right-hand side. But if you look at the volume per issue, and that goes to what Craig and Vincent already said, these are mostly quite small issuances. So the average here, if you look at the currency bar, because that's the largest bar on the right and kind of a medium one on the left, this is around $6 million per issue on average. So we're not talking here about the big issuances that we kind of know from the equity market or from large bonds or these things. So it kind of confirms again the picture what the two speakers before kind of said, that kind of this is maybe that's why it's not of super high importance right now, because they're still of a minor importance on the individual level, I would say. Okay, can you go to the next slide, please? That was the number part. Now the writing part. Yeah, the first part kind of summarizes it. This whole the ecosystem idea. One thing I want to highlight is the third bullet point in my first part here is that regulation is really an issue, I think, in the midterm that is rapidly changing. I mean, you have a lot of countries that try to lure in blockchain industry. I mean, it's very fancy. There's a social pressure to welcome this industry because it's so future oriented. And we're seeing the first moves. So we're going to see a very heterogeneous regulatory landscape. I mean, that's something we just have to deal with. If we're talking about IFRS then being applicable to a lot of these regions, we may have differences there that we have to deal with. In terms of scholar work, again, it's limited. If you think of financial reporting, right, that's again our part. Most of the research is done in finance, entrepreneurial finance, because that's kind of a very good way of getting a new stream of capital or new equity in. That has been done. Their focus is mostly on fraud and fraud prediction, I would say. So some of them use these white papers, but come to the similar conclusion that they are quite of poor quality. They're not regulated. They are difficult to assess for investors as well. What this means, I think, for us will be that people will turn to the accounting side of things to get some reliable information on these issues, either not for the issuance itself, but maybe also to the post-evaluation to make comparisons to other issuances. So that's why I guess there will be a pressure, although we're not directly concerned with prospectuses or something like this, but there will be a need for information. I think that's something we can at least see already when you look at that literature. But again, on the financial reporting side, that we're scarce again. Yeah, that's it on this part.
All right, thank you all. I've seen a question coming in the chat from Anestis Ladas. Anestis, would you like to put on your mic and ask the question yourself?
Yes, of course. Thank you very much. My question is on the ICOs versus IDOs. The current trend is to initialize a project through decentralized exchanges. So should the focus moved to IDOs instead of ICOs? ICOs was the trend in 2017, 2018. But from the first IDO project that was launched, nowadays, most of them are based on IDOs through Uniswap or the Binance Smart Chain and other chains that offer such services. So my question is, should we focus on IDOs rather than ICOs? Thank you.
So anyone, Craig, Benedict, or Thomas, who would like to take the floor?
I guess I can respond to some extent. I would say, although I think the paper that we wrote back in 2018 was focused on ICOs, we do tend to use language now that talks about issuing of crypto assets more generally, and so it's kind of agnostic to the form that you actually end up issuing these. And therefore, I would say we're maybe not entirely focused solely on ICOs to that extent.
I would agree with Craig because, again, the other point here would be the scale of the type of entity that typically issue an ICO, and the statistics that Craig did show, the low prevalence, is a reflection in part also of the nature of the entities that are likely to issue ICOs. So the much smaller entities. But the important thing from an accounting standpoint is really thinking about the underlying obligations and the applicable accounting. So as Craig has said, the form of issuance really shouldn't be, it's not something that should be a consideration when you're thinking of the accounting.
All right, Benedict, do you want to add something or?
I think that sums it up. I mean, again, it's about
Okay.
the issuing, right? That's it.
Yeah. Then I also received a question of Paola Ramassa for Craig Smith. She has technical issues, so that's why she's not able to put a question directly to you. So she asked me to voice her thinking. First of all, she would like to thank you for explaining very well why the EISB has not taken on any further steps in the area of standard setting on this issue. And she also would like to have your opinion on the reasons for issuing agenda decisions of the IFRS Interpretations Committee. Because she says, well, there are criticisms against these agenda decisions, so why are they used? So I think this is a broader question, in fact, than just the crypto assets, crypto liabilities. So it's more a general question on the working of the EISB and the position of these agenda decisions. So if you could say a few words on those, would be appreciated.
Yeah, so I think agenda decisions are a tool that are used by the IFRS Interpretations Committee, and basically they are first and foremost a conclusion by the committee that they don't need to undertake any standard setting for a particular thing or question that has been submitted to it. And there are 3 different reasons why the committee might decide that. And these are set out in our due process handbook. So one might be that the committee thinks that the requirements in IFRS are adequate to allow an entity to work out what its accounting should be. It might be because this particular topic isn't very prevalent, or there's no evidence of this is having a material impact for companies, or it might be because the committee thinks that it's not possible to solve the problem in a narrow scope way. And so when the committee publishes its agenda decision, it first does it in a tentative form, and that goes out for comment, and anyone can submit responses to that. And then the committee later confirms its decision if it thinks it's appropriate to do so. But when it publishes these tentative agenda decisions and the agenda decisions, it sets out the reason why it considers that this is not a topic for standard setting. And particularly when, so basically in the past, many years ago, even before I joined the organization, when the committee concluded that it was because there are requirements that apply and there's sufficient requirements for an entity to work out how it applies. In the past, it never actually said what those requirements are. And a lot of our stakeholders said, well, that's not very helpful. If you think there are requirements that should apply to this, can you tell us what those requirements are? And so the committee started to include a lot more kind of description of what the requirements they think are relevant to this particular question. And so that's why the agenda decisions now contain a lot more information when the committee concludes that there are requirements in IFRS standards that are adequate to allow an entity to account for a particular transaction. So hopefully that answers that question.
Okay, yes, Greg, that answers it. We also had foreseen a polling question after this part. So Baha, if you could launch the 4th polling question. And the polling question is, in fact, do you consider that existing IFRS standards provide a suitable basis to account for the crypto liabilities of issuers, of initial coin offerings, initial exchange offerings, and security token offerings? There are more questions coming in, and I will see Yuchen Wu. So if you can ask your, switch on your mic, you can ask the question, Yuchen.
Hi, thank you. I just wanted to ask, because in the US there's a discussion about the inconsistency of what is cryptocurrency. So SEC and IRS has different views. One think it's property and the other think it's security. I was just wondering whether it matters for accounting standards in this sense.
Okay, so one of you who would like to respond to that question?
Yes, on the question of what they are, so just apart from the IRS and SEC, I guess in the US, there's also the CFTC. So the question of are they commodities or not? So what are they? I guess that's a key question. And in our discussion paper, we also considered whether the security classification, the securities classification can be seen as a cue or as a pointer on whether these assets should be considered as financial assets. However, what we do note is that there's a challenge in actually applying the security regulator classification criteria as a basis of determining financial instrument classification. So that particular type of financial asset really needs to be guided by the IAS 32 and IFRS 9 guidance. And where needed, there could be a change in the particular requirements. So that's the point we do mention as far as financial assets are concerned. But I guess the underlying question there is what type of asset are they? And therein, the clarification that was given by IFRIC in the agenda decision for cryptocurrencies provides an answer somewhat. But you really need to look at I think as Craig did mention, you need to look at the underlying rights as well for each crypto asset to determine the appropriate asset classification. So other bodies are also asking the question, what assets are they? But within the domain of accounting, we need to think about the guidance within the accounting standards and to critically think about the rights and obligations that the crypto assets would have.
Right. So we have another question in the chat. Piotr, so if you would like to unmute yourself and ask the question.
Okay, thank you very much. Am I audible? By the way?
Yes, you're audible.
Mm-hmm.
Yeah.
Okay, Thomas and Craig, if you look, I would like to have your view on the long-term development of the crypto assets standardization, because that's what I observe. We rather recently import more of the solution from the banking industry, especially from the capital requirements. And it's probably the first hit to understand how the cryptocurrency is going to affect will be through the supervisors, and they usually use the Basel for their monitoring of the risk. On the other hand, just from the perspective of guys involved in the integrated reporting, they see some of the much more systematic risk regarding to the cryptocurrency, especially in kind of climate changes. I mean, could you please size up which direction may be much more influences over the next few years?
Vincent or Craig, who wants to go first?
Yeah, I guess it's difficult for me to answer because obviously I think the requirements in Basel, for example, and integrated reporting are perhaps for different purposes than for IFRS standards. And so we have a set of disclosure requirements that I tried to highlight that are in each standard already. To the extent that users find other disclosures via Basel or integrated reporting or something useful, obviously they might highlight those to us, and the board might consider at a future day as part of its standard setting whether to change those disclosure requirements. But I'm not sure where the kind of direction will come from, if that makes sense.
Yeah, I agree. It's a tough one. We just briefly touch on the potential unintended consequences as far as the interaction between the accounting and prudential requirements. So we mentioned this point as far as the potential classification as cash and cash equivalent. And we also raise questions as to what the implications would be when you've got an intangible asset classification. Because I think in the past determination of the prudential capital requirements, there was some adjustments that were being made based on whether items were being deemed to be intangible assets. So we note this interaction, but we do not see At least we do not put forward a point of view that there needs to be an alignment. We just note it as a point to bear in mind and think about the potential unintended consequences that an accounting classification choice may have for the banking industry. But this would need some more detailed and more comprehensive analysis to really do justice to the question you raise.
All right, I would suggest for the sake of time that we move on now to the valuation, but Baha, you can first share the results of the poll. And there we see that 20% of us think that existing IFRS standards provide a suitable basis, and yeah, the remaining part of the audience says no or has no opinion. So thank you for taking part in these polls, and I suggest we move to the last part of this session of this workshop, and that we now focus on valuation of crypto assets and crypto liabilities. And I give the floor back to Vincent.
Thanks, Anne. So the third key area we addressed was valuation. And the discussion papers chapter was informed by a review of literature, in particular, a Canadian Chartered Business Valuation Institute report and an EC report on the valuation of crypto assets, as well as the feedback we got from outreach to stakeholders. So there are two key issues that I would note that do arise. The first issue is that the unique nature and/or multiple element characteristics, the hybrid characteristics, which I think Benedict referred to when he's talking about ICOs of different crypto assets and liabilities, can make valuation highly complex. The second key issue, which we do highlight, is the difficulty in defining active markets. Notwithstanding that for cryptocurrencies, they currently trade on over 1,000 exchanges in various jurisdictions and geographical locations. So the various challenges we do pinpoint, one that arises due to the variation of prices across exchanges and brokerages. There's also a question of the reliability of market prices. Another point is the 24/7 trading requirement across markets and the associated intraday volatility. And there could be a question on how one can determine the closing price as a reference point. Another issue that was also raised during the outreach is that there's a view that in cases where you've got crypto to crypto exchanges, is that deemed to be appropriate for consideration as a market? So are you only focusing on where you've got crypto to fiat exchanges, or should you encompass also crypto to crypto exchanges? So that's a question that has arisen. A final issue I would note here, which was actually pinpointed in the paper that Steve Cooper, the opinion piece that Steve Cooper wrote, was around the determination of unobservable inputs and the challenges that do arise due to when an entity applies an observable input and has a level 3 fair value. So in our analysis, for example, we looked at a particular company whereby they were noting that the marketability discount could range from 17% to 73.4%. So it just shows you the level of significant uncertainty that some entities do face, even when they're giving a fair value or reporting a fair value within the financial statements. Moving on to the next slide. So in this slide, we do touch on the actual valuation methodologies. And here, I would note that these are very much a nascent or emergent set of valuation methodologies catering for the rather unique nature of crypto assets. The European Commission report that I noted earlier on cites a paper by Bolt and Van Oort, which was issued in 2016, which was developed based on the valuation of cryptocurrencies being based on Fisher's equation of exchange. That's the macroeconomist Fisher in 1911 had this equation of exchange. So applying the same framework for currencies, that was one approach that was proposed. The CBV Institute report highlights 3 key methods. The first being the cost of production, So cost of production for Bitcoin consists largely of electricity and computing costs. So Bitcoins are created through a process that's called mining. So there's a cryptographic process whereby a validation occurs and Bitcoins are rewarded when a block is updated. So that's how Bitcoins come into being. Now, the cost of production in that case would consist or would provide the lower bound of value. So the argument there being made is that no prudent buyer would pay more for rights than the cost to construct a substitute of equal utility. However, the cost of production has limitations. It is only appropriate for proof of work type validation, but there are other types of validation that are applied for other types of crypto assets. So it's not really applicable. Another approach is the equation of exchange, which I think is pretty similar to the one that was cited in the EC report, which is used to value cryptocurrencies as well. So they are really looking at the interaction between the velocity of money, price, quantity, to come with an estimate of value. A third approach is one that's described as the network value to transactions ratio. So there is a theory which is called the Metcalfe's law, which states that the value of a network is exponentially driven by the number of network users. So based on the users that are there in a network, one can do a relative value type comparison across different crypto assets to come to a suitable value. Beyond what we've touched on in the discussion paper, other approaches have also been put forward. One approach I came across was that where it's called the total addressable market approach. So for example, when you take Bitcoin and you take the argument that it's meant to be the equivalent of gold. So for those who deem Bitcoin to be aiming to be the equivalent of gold, you'd look at the valuation of gold in entirety. So all gold that's above the ground, which is currently estimated to be worth $13 trillion. And then when you look at the potential supply of potential Bitcoins, which will be $21 million, you'd come to a Bitcoin value of $620,000. So to the extent you assume that Bitcoin is as good as gold, then it should be worth $620,000. So where it trades currently, there's a view that it's about 10% the value of gold. But also this approach has limitations, and not everybody subscribes to the viewpoint that Bitcoin is equivalent to gold. The final point I would note that these approaches are actually analogous or comparable to the traditional valuation approaches, which are well known within accounting literature. So there are three key categories of valuation approaches: cost, income being the discounted cash flow type methodologies, and market-based approaches, which are also comparable to the relative value-based approaches. So there's a degree of similarity, but nonetheless, one would note that these are unique assets and people are still getting their heads around on how to value crypto assets. I'll now move to the way forward. I guess that's the concluding bit that I would like to touch on, which is the next slide. The next slide, please. Next slide. So what's the way forward? So our discussion paper at a big picture level provides a roadmap, a potential roadmap to the ISB. So there are three key options that are laid out. One, do nothing at this stage and really have no key change in the existing IFRS requirements. So the arguments that have been put forward by Craig in his various presentations, the viewpoint that crypto assets are not pervasive, and pointing out that in various respects, the ISB requirements implicitly cater for crypto assets, then you take the option one as being the suitable approach. Option two is enhancing the current requirements. So you either clarify or amend existing requirements in the areas we've pointed out in the presentation, in particular in relation to holders. So the options around how do you address IS 38 and IS 2? Could crypto assets be excluded from the scope of these standards? Because here the issue is not so much what type of class of asset are they, but the measurement outcome. I think people are concerned about the measurement outcome. So should they be excluded from the scope of IS 38 and IS 2? IS 7, we'd mentioned earlier on, and the definition of cash and cash equivalent? Does that need to change when you take into account the CBDCs, the central bank digital currencies, as well as stable coins that are coming to play? And the other areas of clarification that might pertain also to issuers of crypto assets. The third option, which we've put forward, is one whereby a new standard is developed tailored for crypto assets and liabilities, or potentially for a broader category of digital assets and liabilities, because one could take the view that crypto assets are just the first generation of blockchain application, and they may be an evolution or an emanation of different types of instruments and products, and there may be accounting issues that would arise with the broader application and use cases of blockchain. So do you need a broader standard than just one that's related to crypto assets and liabilities? And we also open ourselves to any other options that we may not have thought of in the discussion paper. We do not opine on which of these three options we deem to be appropriate. So it's very much an open-ended question, and we welcome stakeholder feedback in our discussion paper on the options on the way forward. So I'll stop there.
All right, then I give the floor to Greg to ventilate the point of view of the EISB on the issue of valuation.
Thank you. So I'm kind of going to amalgamate valuation and options for standard setting into kind of one discussion. And start with, I think, when it comes to talking about the accounting for crypto assets, it's maybe not that helpful to think about them in a broad sense, because as we've talked about already, they do have different kind of rights and obligations that are attached to them. And it's basically the accounting is informed by what those rights and obligations really are. And so in the context of accounting for crypto assets, I think it's helpful to think about a particular subset that you want to change the requirements for. And in my experience, most of the requests for changes to IFRS standards in this area are all about holdings of cryptocurrencies specifically. And in particular, I think as Vincent has mentioned about some of the measurement questions around that. So I know there's quite a few stakeholders that would like to move to a more fair value based measure on that. But to start with, I think it's kind of useful to know what the starting point really is. And so there is a bit of a difference between IFRS standards and US GAAP, for example, because I think a lot of the comment and the commentary that I see on wanting changes to accounting for cryptocurrencies are in the context of US GAAP, where in US GAAP, they are accounted for as intangible assets and they are measured as at cost less impairment. There is no revaluation model in US GAAP, for example. But as I mentioned earlier, there are circumstances in IFRS standards where an entity is permitted or is required to account and measure its cryptocurrencies at fair value already. And those circumstances are fairly limited. So to an active market, if you're in IAS 38, or to when you're a broker trader in IAS 2. And so the question really is, do you want to extend the use of fair value for cryptocurrencies in IFRS standards beyond those particular circumstances? And as I talked about before, I think there are some board members that are concerned about expanding the use of fair value for cryptocurrencies, particularly to those beyond those where there are observable prices in active markets. And there's a question from some board members as to whether it's really possible to obtain a reliable fair value estimate for these cryptocurrencies, particularly because the only way that they have any value is through being able to sell it to someone else. And so without the active market, how do you really work out how much you're going to be able to sell it to someone else for? I know I think at least in the November 2019 committee or board meeting, we were aware of the CBV paper that Vincent talked about. I guess it's not having the evidence to support those board members and making a decision on how well those models really actually work in practice. and how useful to users of financial statements find information derived using those types of fair value models to really be. And so that's something I think board members would be quite interested in finding out in terms of research as to how reliable and how useful that kind of information would be in its future decisions. So the options for standard setting that are on here, and I think I'm correct in remembering, these are the ones that are set out in the agenda consultation. The top three of them obviously are all about fair value measurements to some extent. The investment standard, Vincent, as mentioned before, there's a possibility. I know some are concerned about recognizing changes in fair value in OCI rather than P&L. And so one of the things the board could consider is changing your evaluation model in IAS 38. The top one, just to mention, I know Vincent has said some stakeholders, just like the board, to remove cryptocurrencies from the scope of IAS 2 and IAS 38. And it's something that I've heard. I guess from a personal perspective, I think that might be difficult in terms of the board's mission statement, because obviously it's trying to get a single set of standards that apply to everything. And to remove a set of requirements and not replace them with anything else is a bit difficult. And so the top one on this list is actually building a little bit further on what Vincent said, is taking it out of the scope of IAS 38 and actually putting it into the scope of perhaps IFRS 9, for example, so that everyone knows what the requirements actually are. The only thing that's maybe not directly about changing IFRS standards to talk about fair value is the one at the bottom, changing the definition of cash. We've looked at a little bit already, the definition of cash. The one in IAS 7 is maybe a little bit circular, but IAS 32 does give you a bit more of a steer. I know some people would prefer that definition to be a bit clearer. So maybe to put some kind of basically to try and explain how widely used as a medium of exchange or as a unit of account does something need to be before it is cash. Some people would say we should add in the third kind of economist criteria that I mentioned, so the store of value. But I know some others are concerned about that, particularly when you consider the impact on perhaps hyperinflationary economies, for example. And so some people would prefer us to make it clear that an asset can only be considered cash if it has some kind of government backing, for example, or some legal tender, and restrict that definition of cash much more narrowly. So I don't really have that much else to say on valuations of ways forward. I think EFRAG's discussion paper is helpful input into the board's agenda consultation, and it's something to consider. If anyone does think the board should change some aspect of accounting for crypto assets, then of course I would encourage them to respond to the agenda consultation and the request for information. But that's what I'll say just now.
Yeah, thanks a lot. So if you want to put your ideas to the board, you can either at the moment put them in the chat, of course, then Craig can see them directly, or later on in the agenda consultation response. And I would now give the floor to Benedict to give his academic take on the issue of valuation of crypto assets and crypto liabilities.
Exactly, thanks, Anne. Yeah, so we obviously talked before, so I knew that Vincent is going to talk about these three valuation methods that are kind of an analogy to existing valuation methods, and we discussed a little bit in the pre-talks kind of what are issues so I'm trying to respond a little bit to that. I mean, I can just confirm it's most of these things come from funds, investment funds basically, that try to find misvaluation in the market, right? I mean, that's, and you see most of them existed or came to life in 2016, 17. So that's kind of where the market started to hit off. So a lot of funds were basically interested in going into that area. And that's where you saw these methods being developed. So they basically picked, I would say, monetary economics type of valuation methods, and then saw the networks as kind of a money supply. And that's, for instance, the equation of exchange is kind of literally based on this. And then the other analogies with the production costs and things. So they try to develop a method to differentiate good and bad investments, and that's what they are. So one thing that also Vincent now mentioned in the talk is that these methods are not universal, right? I mean, they apply to different tokens or coins. Most of them are designed for cryptocurrencies, and they're really designed to compare, let's say, Bitcoin versus Ether on Ethereum. They're not designed to give you, that's my fair value, that's the market value that we can expect. I mean, it's mostly clear when you look at these network ratios. I mean, it's a ratio. So you automatically see, if you don't have a benchmark group you compare it to, this ratio doesn't really help. Yeah, so that's one thing that they don't have an accounting ecosystem in mind, and they don't have the same goal that we would have now to, let's say, find a fair value for these kind of things and maybe adjust existing valuation methods. That's number one. Number two is coming back to my comment earlier that we are usually having blockchain networks. So if we're thinking about how to value individual tokens, we will run into issues with most of these methods. And we also run into issues with our market valuation that we see on each exchange, even if they're correct, because what we're going to see is a valuation of the whole network plus the token or whatever we're interested in. So this is just something to think about. And I think this is inherent to the whole technology. I mean, we're talking about blockchain technology, so we're inherently talking about peer-to-peer networks. So we're always valuing the whole network with it. Yeah. So if you're have my examples in mind, when you issue some platform which has a token and a cryptocurrency, if the cryptocurrency dies out, the token will have problems as well. So everything is interconnected, which is the idea of the whole thing, but which makes, again, valuation complex. I mean, this is just highlighting the issue. I unfortunately do not have a solution for these things, but that's just to consider. I think when you look at these valuation approaches, and we can use them for what they're designed to do. So if we have a market value on an exchange, we can use them as warning signs or to spot problems with the price we have. That is maybe a way to have them as a safeguard, but I'm not sure whether we can, or we would use them, yeah, as a fair value measurement tool. I mean, I don't see that right now. The last bullet point is just to highlight that we had the example of someone losing the wallet or the key, and then everything is gone. This is fairly often mentioned, that these valuations are also quite specific, so firm specific or individual specific even, which just comes from the fact that everything we do here are digital representation of economic values. So as soon as you lose the key to your digital representation, you lose the economic value, which is something we usually don't have. Fair value wouldn't do that, right? We would not be interested in this kind of specific types of, let's say, idiosyncratic value here, but it plays a role. And we saw Vincent had the example of this $400 million worth of wallet being gone. And this is a specificity kind of just to have this type of technology around. Okay, so that's it for valuation. If you go to the next slide, I will give my final slide now on the way forward. And the way forward, I mean, that's kind of where do I see us heading? I don't know it's not my way to say what's the way forward and what the ISB should do or should not do. But it's a little bit, what do I think the world will look like in the near future, actually? And we have also had the poll question on this. I mean, there's a clear social pressure on the countries to accept these industries. I mean, that's kind of clear. You see some of them kind of jumping forward with regulations. There's a clear push to alleviate regulations, and so to help this industry settle in certain countries to attract them. So as I said before, I think they will be around. So we will have to deal with accounting in a crypto world, I called it here. The question is, how do we see these crypto assets? So one thing that is, I think, natural to do is look for these analogies. So is it similar to, and then try to combine it. The biggest issue, I think, right now, and if you look at the academic paper, and especially the conceptual ones, is what are they? How can we see them? So, and one thing I try to treat them, at least in my research, is that they're really a digital representation of an economic value, which may either live exactly on the same blockchain, that would be a crypto asset, cryptocurrency. So kind of the Bitcoin is created, transferred, and lives on the same blockchain. But then you have things that are physical objects that are bound via a token on a blockchain. So that's kind of what we would say is kind of a traditional ledger, which then is moved just digitally. And these two things are different. These are two different animals. One carries the economic value, one's only represents it. So I'm just trying to put this out there as maybe a different viewpoint, let's say, yeah, because I see that the way forward, how it was posed was like, do we integrate them into existing standard or build a new one? And I mean, both is not ideal in my viewpoint, and maybe just a different perspective in what crypto assets are, like, as I said, then representation of economic value may help to make it more principle based and then push it down the line. But that's, again, a very accurate view of me. For everyone else doing academic research, so I'm very happy that 33% of you do research. So I didn't expect that. That's good. That's a good number. And already posted in the chat to send all the research to Vincent. Do that. So Vincent, you forward that to me. So, you know, having more research is always good. I mean, it's I did a search. If I missed any of your papers, I'm very sorry. But I think, especially on financial reporting, that's not much. And I think this whole session was, for me at least, also the preparation, very helpful to actually get into the topic. Because I think most of the research we are doing, we're not there yet. We are still on the conceptual level. We're still bound to cryptocurrencies. I mean, for sure, everyone doing empirical research, that's the only data you kind of get. But I think there is a high need also for applied research. So to get in touch in what do regulators do, does the ISB, what do they need to know, and kind of do something applied. But there's also a need for empirical and theoretical research, let's say, on the next step, going away from the conceptual stuff. I think there is a lot of good things out there, but kind of taking the step. So I can only encourage everyone to do that. And you see my last bullet point on the big picture stuff. I mean, that's interesting. That's kind of the change in the business models and how does the technology do. The next step then is to think with the ISB and everyone and EFRAG and everyone involved, what does this then mean for how we present these business models? Because we kind of have two changes at the same time. So the business model changes, the representation changes. So I think it's very valuable to have this interaction. So I'm glad to have this session, and that's it for me. Thanks.
All right, I would like to say to the audience, it's not over yet because we have 4 polling questions that we would like to propose to you. And these polling questions, they are especially interesting to EFRAG and to the EISB, because we will ask your view on these issues now. And that's really informative for them. So Baha, if you could bring up question 5, thanks a lot. So the question is, in the absence of an active market, do you consider that IFRS 13 provides an adequate basis to determine an appropriate valuation technique to measure crypto assets? So, and I see that the voting is going on. Also, if you have questions or suggestions, you can also use the chat in the meantime. And I can follow the voting in progress. And I think we can close the voting. Yeah, let's close the voting now. So definitely, most of the people, if I take no and no opinion together, at least 51% says no. So in the absence of an active market, IFRS 15 is definitely not considered as an adequate basis. So Vincent, I think this is quite interesting information for you. So we have the 6th polling question. And again, you will be very helpful to EFRAG if you would answer to that one. So the 6th question is, from your perspective, is future standard setting needed to address the limitations of IS2 and IS38 requirements to address crypto assets to fall within the scope of these standards? So I'm looking at the voting going on. And I would say that we really have a very large majority, I could say. So we can end the polling now. So a large majority says that there is indeed further standard setting needed, so that IS2 and IS38 are not sufficient to address the requirements to account for crypto assets. So definitely standards information needed. So again, Vincent, very information useful, because I mean, the yeses and the no and no opinion this time, they lie, there's a big deviation between them. So Baha, then I would like to invite you to share, the 7th polling question. And that one is, should the IFRS definition of cash and cash equivalents be updated? So Craig referred to it in his last discussion about cash, also Vincent referred to it. Okay, so I think we can come close to this one. So here, the views are not that wide deviation. It's almost, if we count no opinion together with the no's, it's almost a 50-50 on this one, in fact. So I think, Vincent, that's also interesting input for your way forward with the discussion paper. Baha, I think, we have another question still for our members. So, and I can assure the audience that this is the last polling question we put forward to you, but nevertheless, it's a really important one for Vincent. So which of the 3 proposed options do you consider to be the most appropriate approach to developing IFRS requirements? So no amendments, amend or clarify existing IFRS requirements, or go for a new standard. And what is already certain, if I look at the answers coming in, is that status quo, no amendment is no option at all, because that has 0 answers. I can think we can close the voting at the moment. So, Vincent, there is a majority, 60%, that really asks for the development of new standards on crypto assets, liabilities, and digital assets. Still 40% thinks that we can solve the issues with amending or clarifying existing IFRS requirements. So it's a division, so 40 and 60%, but I think it's also helpful to see these opinions. And I would like to thank everybody for taking part in these polling questions. Are there any last items you would like to ask to Vincent, Craig, on this issue? I'm looking at the chat again, if I didn't forget any message or question that has come in. I don't see any information in the chats popping up. If I'm looking at the time foreseen for this seminar was until 2 o'clock. So we are close to 2 o'clock, so time management we did well. So what I would like to do here is, if you have elements you want to share with EFRAG, use Vincent Papa's email address. He will share this with Craig and Benedict, I'm sure. So you can email him on things which pop up, research you think of and you didn't think of now. So the line to Vincent is open to feed him with information as much as possible. I want to thank all three presenters, I should say, Vincent Papa for introducing the discussion paper on crypto assets, crypto liabilities to our EA audience. I would like to thank Greg for really, in a very transparent and clear way, informing our EA audience about the position of the EISB and the work they intend to do, and also the way people can react to the EISB through the agenda consultation. And I want to thank Benedict for looking up all this information, trying to find out what kind of academic research has been published on this topic. So all three, thanks a lot for all this, the time you devoted to this session. And then I would like to thank the audience for being there, for taking part in the polls, and for raising questions. So thanks a lot for your attendance. And I think we are at 2 o'clock, so we can close the session here. So thanks a lot, everyone.